for business people.
Good afternoon, you're watching Bloomberg Quint Live and these are the headlines at 12. It's a strong start to the trading week. The Nifty scales the 10,600 mark, thereby posting new record highs. GSPL gains for the third time in 4 sessions. The latest update, it plans to raise up to 3,000 crore rupees. Idea Cellular and Bharti Airtel are the worst performing large cap stocks today. Reliance Jio comes out with cheaper tariff plans. And Sun Pharma is the top gainer on the Nifty after a series of reports that suggest that its Halol facility may be inspected by the US FDA in February. That's a positive because it can then restart exports if it gets clearance. And without further ado, let's go over to Darshan Mehta for Hot Money. Darshan?
Thank you, Alex. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then, Vinit Bolinjkar of Ventura Securities, Sangeet Lakkar of Newberry Capital, and Kalra of Target Investing join us on the show. Thank you all for joining me on the show. Today on Hot Money, we'll discuss stocks like Idea Cellular, United Spirits, PI Industries, and Hyderabad Industries or HIL. Let's move on to the first stock, and that is Idea Cellular. Now, a couple of news bits that gauged Idea. Over the week, initially last week, news coming in terms of the big fundraising plans that they have, the counter managing to react positively, and over the weekend, negative news coming in terms of Jio further reducing its tariff. So that's taken a toll as far as some of the telecom stocks are concerned. So Bharti as well as Idea are down in trade. What should one do with Idea now at this point of time? Samir, I'll start with you. What do you make of Idea? A lot of news coming out, but overall, what should an investor look at when he's analyzing Idea Cellular?
So when you look at Idea, and now when you look at Idea and Vodafone, right? So there'll be, as entities, there'll be 3 major: Reliance, Jio, Bharti Airtel, and Idea plus Vodafone. So if you see all 3, I'm a little neutral to bearish on Idea. Given simple reason, one is even if they reduce the debt with the amount they are planning to reduce, it still comes to around 75,000 crores on a merged entity, where current EBITDA is around 20% and Bharti is giving around 35% already, and it has a debt of 1 lakh crores which they are trying to come down with. So deleveraging is happening at both places. If you see, Idea alone is losing out subscribers. And see, eventually now it will be more towards prepaid and postpaid. So if you see the plans which Jio is offering and others are offering, they are more aggressive on the prepaid ones because that kind of funds their working capital requirement. And the more prepaid you have in the system, the better for you even financially and even on the margins. That's what Jio is playing on. So that's why it can afford to reduce that and have that kind of price war. Because right now, if you see the numbers, the margins are almost above the Bharti numbers. So I think Idea as alone will be still in the bearish, and they'll need more money to be infused if they have to fight for the market share on the combined entity as well. So I don't see any bright future in the medium term as well.
So with Vodafone coming in, how does the situation change? Do you think that there will be enough traction? They will pretty much become the largest player in the market, and probably with a 3-player market, don't you think that there will be more consolidation rather than aggressive price cuts that could come in?
See, I think that's what everyone thought when Reliance Jio took the price hike, that this situation is over. But 2 months down the line, you see another price cut coming up, which has actually reduced the ARPU to around 131 from 139, which came last quarter. So I think this fighting war will not go off very soon, because even if there's 3, like if you see a Pepsi and Cola, right? There are two people. Or a Boeing or Airbus, there are two people. But the only point is the price wars make it so bad that they are not able to make money also out of it. So that's why I'm saying, so it's okay that the market has consolidated, but the only point is the consumer is still wanting to have a lower price.
Okay.
He's not happy paying a higher price for anything, because somewhere Reliance saw some number internally where they took a call of cutting the prices again.
So this concern of yours is for the entire telecom industry or only Idea?
Yeah,
so Bharti would also be in the same boat, right?
Yeah, so I prefer playing it through Reliance.
Okay.
Because the only point is he has the other business giving him that cash to play on. And the other business, capex is over now. So he'll have more cash flow from this year onwards. This year and all. So he has more money to play on and gain the market share out of that. So I think out of those three, Reliance is a better play if you want.
Okay, Sangeet, what do you make of Idea? Do you think that the points that he make were valid, or you have a different view here?
So I'm neutral to the stock. I think short term there would be more pain. I think the important trigger would be the vision which Reliance Jio has for the sector. So right now Reliance Jio is commanding about 15% market share. And when they took a little price hike in October, that time it was deemed that they would be happy with a 15 to 20% market share with being the third player in the market. But now with the recent price cuts over the weekend, now it appears that they intend to get a higher market share. Now if that is true, then there would be more pressure. But having said that, for the sector, a three-player market, it's all consolidated. Over a period of time, you will have margins coming back. You'll have data consumption is anyways growing, and it's nowhere going to slow down. So as a sector, it's positive. Talking specific to Idea, yes, there have been good news about promoter reaffirming its commitment to the company by infusing funds. They also are deleveraging by selling off their tower assets, and also they are diluting the stake in Indus. But all this taken together are just going to get them about 9,000 crores.
Okay.
The current debt is about 55,000 crores, even on the standalone entity. So in terms of numbers, it's not going to do much to the balance sheet. So I remain neutral to the stock.
And is your view similar for Bharti also on that? Because you said you were positive on the industry as such. So
Yes.
would that mean that Reliance or Jio or Reliance Jio and Bharti would be a better pick than Idea at this point of time, or you would be neutral on them also?
May not be at this point of time, because you'll have to keep in mind that there has been significant price jump up over the last couple of months. Even Bharti, also Idea. So we'll have to wait for some maybe either a better price or for industry dynamics to change to enter into the stock.
Okay. Vinit, you don't have a view on Idea as such, but just a broad view on telecom as such, because the thing was that everyone thought that, as Samir pointed out, that when Reliance raised its tariff, everyone thought that good news is back for the telecom sector, there will be consolidation, and all of a sudden this shock cut that came from this thing. So what do you think how will the dynamics change? So is again telecom going through a pressure situation where there will be more intense competition and price cut that could come ahead?
Yeah, obviously Idea in the last few months did not have traction in number of subscribers, whereas the rest of the industry grew quite a bit. And with Reliance coming and cutting tariffs, obviously the signal is out that they want more market share. Number one, and they had earlier said that they were way ahead on estimates on profitability. So I think they're willing to play the game a longer for seeding the business. And that does not augur well for Idea.
Okay.
So the stock should come off.
Okay, no, but overall on the telecom industry, what would you think that pricing pressure will sustain, or there will be more pressure?
I think there will be still more pressure, because it's going to be a bitter war. So we have seen Reliance come in as a leader in 4G and the others playing catching up. And 5G is also going to be kind of a pressure on everyone. On that side, Reliance claims to be well prepared to take on the 4G and 5G. So these other two incumbents will also find it a little bit difficult going forward.
Okay, so that's the view that's coming in basically on Idea at this point of time. Samir is slightly neutral to bearish on Idea. And the telecom space as such, similar is similar is the tone that even Sangeet has pointed out in terms of Idea. So we may be in for some rough ride as far as the telecom sector is concerned. Let's move on to the next stock, and that is United Spirits. The counter was up almost 7% this year, trading at pretty much lifetime highs. There seems to be enough traction that's happening. It's almost doubled in the last 12 months. So what exactly is happening? News coming out is the fact that the Telangana government has allowed price hike for the industry, and Macquarie in its note is saying that the average price increase for United Spirits portfolio is close to 7 to 8%. What should one do in an industry which is growing, but there are significant amount of regulatory headwinds that are still persistent for the sector? So Vinit, what do you make of United Spirits? Are you bullish on the one?
I'm extremely bullish on
Okay.
the stock. So one is the structure of the industry. So we have got the lowest per capita consumption of alcohol at 2.2 liters. And with 50% of our population being under average age, so the median age is about 29. So all that population will now, it actually means that from about 120 million, we will be going to 60 million over a period of time.
Okay.
Those who are in the category will be eligible to drink.
No, from 100
20 million
Okay.
to about 600 million.
Okay, 600 million.
Right? So with this kind of potential lucre of the market, plus the fact that we are the lowest consumers, really is a very, very sweet spot for the industry.
Okay.
Okay. Secondly, social drinking has become an social acceptance, and all the states are also going soft. So we've seen Telangana increase prices, and the company has also done a lot of strategic work. So in the popular segment, they've gone through the franchising route. Working capital is lower, and hence they're able to get better margins. Royalties are good. In the premium segment, they have done well. Their three brands are doing very exceptionally well. They've cut debt. They have promised to cut debt further. And in the P&A segment, I think they're going to, they're obviously the leaders. So I think this stock will show, I think, 50% CAGR growth in EPS over the next 3 years. So given all these settings, the stock may look expensive, but PE multiple of upwards of 50 is warranted. Internationally, FMCG stocks, liquor stocks tend to get a 10 to 12% premium to FMCG staple stocks. So I think the premium will come out here, and given its high growth rate, the sustainability of the peg will
Okay,
be
because
strong.
I was looking at the Bloomberg consensus estimates that are there for the PE. So for this year, it's over 100 times, and for next year, it's almost 72 times. In an industry where regulatory headwinds are still there, do you think that this premium is warranted?
I think there's only one stock of its pedigree, so around 60-65 times multiple. 1 year forward is.
So what do you make of the smaller rung players? Like GM Breweries came out with a fantastic set of numbers. I'm not asking you to analyze it, but if you look at it, Radico and all of them have outperformed and they've been showing results. So and that
Yeah,
has
so
not-
that the entire industry is going to move well.
Okay.
So that entire industry will see a re-rating out there.
And you're not concerned with the issues like you said that Telangana has increased prices. They've allowed, but at the same time, Bihar is looking to curb alcohol consumption. So my only point I want to understand is how big of a risk is this alcohol ban on?
So if we
United
take the proxy case of cigarettes, so cigarette smoking has really not gone away. We've had the highest excise rates, all things put in place. So cigarettes consumption has not come down. So and I don't think the tipple will go anywhere.
Okay. So it's an extremely bullish view on United Spirits that's coming in from Vinit. Samir, what do you make of United Spirits?
So I'm neutral. I'm a little bearish given the valuations, yes. Secondary, see what happens, then there are two plays. Either you play the pricing or the volume. When you start to give away the mass segment to the franchisees, you have to have these quality control as well. So it's not that easy because it's alcohol. So any which way governments and political parties are much more aware of it. So there are more issues when you're franchising it out. So it's not that easy that it'll happen in next 1 year that fully it'll franchise out. It's just starting to test it out, which reduces its working capital definitely. But the only point is that volume also gets out. So that volume game also goes out, and when that kind of a price premiumization only comes in. You don't have the full portfolio of from the starting to the end. That's where I think the lower guys like a Radico Khaitan or a GM Breweries and all will be able to capture better off that kind of a pricing. So when I invest in United Spirits earlier, I was getting the full portfolio. Now I only get a higher end of the portfolio. So I think the mass is still more into the alcohol consumption. The premiumization is more urban trend. It's still not the tier 2, tier 3 kind of a trend going on, because McDonald's, which they are trying to premiumize that. But eventually it's a mass segment kind of a product for them. Otherwise, even if you see the numbers and all, they still have that 4,000 crore debt on there. I think the valuations only hold because there's always a talk of a buyback from the MN's parent, right? And that keeps that valuations a little up. But I think 72 times forward earnings, I will not be able to pay that much. I rather go for a Radico Khaitan, which is much more cheaper in a certain sense.
So just one.
So
due to the premiumization, their revenues were down about 22%. Okay, in spite of that, the stock has run up. And on the debt side, the 4,000 crore debt has come down to about 3,500 odd crores, and we are guiding for around 1,000 crores less next year.
Okay.
So there's huge unwinding taking place.
Have they indicated how they plan to reduce their debt?
More
by the cash flows?
Yeah, more by the cash flows.
Okay. And just one thing, you spoke about the mass segment and the premiumization segment. Do you have the numbers? How much % of their revenues are from the premium segment and how much?
So they do around 40% of the volume comes from the mass, and 60% is divided into that medium and premium. So the mass, which 40% they are talking about, was 22% volume down last quarter. And this is a problem for them because see, Diageo, if you see globally, handles only premium segments. It was never into mass segments. And they, the volume of that getting removed from the franchisee only goes towards royalty. So they'll take a royalty plus a minimum guarantee kind of a system from that.
Okay.
So that volume gets out. So around 30 to 40% of volume will be affected as they go on franchising it.
Okay.
So it goes off the books, and then the volumes cannot be compared, like to like.
Okay, so it's a cautious view that's coming in from Sameer on United Spirits. Sangeet, what do you make of it? You've heard both sides of the argument.
So I'm neutral to bullish on this stock.
Okay.
At probably 4,000 rupees, I'm a little neutral. At 3,000 rupees, I was quite bullish. Yes, it's a premiumization story. The volumes have grown by double digits in the premium segment. 63% of the revenue comes from the premium segment now. The management has been fairly robust in their cost control and their strategy since the time Diageo has taken over the management. If you have been, I mean, even if you attend the con calls and if you listen to the management, if you read the annual report, the small things that they are doing, so like all their popular segments, the economy segments, they have aligned their bottling sizes. So only one bottle for every popular segment brand, which has saved them quite a bit in their operational costs. So things like that they have been doing, small things which are helping them generate that extra bit of margin. My immediate concerns remains on the Karnataka elections. Karnataka forms a very large proportion of their overall revenue. And about a couple of months back, there was a delegate which was sent by the Karnataka government to Bihar to study the implications of the alcohol ban. We haven't heard anything, any news flow after that meeting or the deliberation. But as and when the elections fever turn up, that will be an important news item to watch.
Okay. And valuations are fair according to you? Or
so yes, the PE are it's at about 80 times, 100 times. But you'll have to understand that the company has gone through a lot of transition over the last 3-4 years. So the earnings were depressed. Also, there was regulatory headwinds in form of Supreme Court ban and GST input credits not being made available to them and all. So I think you'll have to more project it from a future earnings point of view. So yes, it is expensive. It is by no standards cheap. but it is not as expensive as it optically looks.
Okay, so that's the view that's coming in on United Spirit. Vinit is extremely bullish on the counter. Sangeet is neutral to bullish, while Sameer is neutral to bearish on the counter. So that's the view that we're getting. Before we move on, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, the next stock that we'll talk about is PI Industries. The counter has managed to rally almost 9% from the recent close. It's been doing well, one of the largest players in the agrichem space. Sangeet, what do you make of PI Industries?
So I'm bullish on this stock.
Okay.
Again, valuation is a concern. It's trading at about 28 times. It comprises largely of two businesses. The domestic agrochemical business is about 40%. And the custom synthesis business is about 60%, which is also their export business, where they contract manufacture for the global branded players. So over last couple of years, we have seen a little slowdown on the export bit of business. But I think going forward with they announcing their plan to diversify into non-agrochemical space also, and the industry globally consolidating should benefit for them.
Okay.
So debt-free company, very robust management, trading at 28 times, little cautious, but overall good business.
Okay, what about you, Sameer, on PI Industries?
So I'm neutral to bearish here again. Mainly if you see the business, and even if you see the domestic business, there's this nominee gold herbicide which they supply, and that's their flagship product. So that was patented for quite few years now. Now that patent goes off, and there are 24 generic brands of the same product. So it's used for rice herbicides, and it had around a 30% market share, if I'm not wrong. So that 24 generics which have come in is giving a good competition to them in that flagship product. So because of that flagship product, they were able to create a lot of cash flow, which was benefiting them in another R&D and going out for the export orders. So it past 3-4 years have been really good for them. Now if you see the export side, now those export businesses which they have are lumpy. So those are more delivery date based kind of thing. Now those in past 1 year have incrementally slowed down. So future export growth will be any which way lower in single digits or even negative. And domestic business, the flagship product is already facing a lot of competition. That's why they're taking somewhere a call that we need to diversify and reduce the dependency on the agriculture system. So they are kind of coming into imaging solutions. I think they should announce in second half with this result. So, and other side is, being this kind of a cycle in the business, and you not having that kind of exports and your domestic facing a heat, that debt-free status somewhere is hurting their working capital cycle. Because this quarter it increased the working capital days by, I think, somewhere 10 to 15%. So that slowly will come into the picture unless it's addressed. And more capex you do to a new business, more money it takes in.
Okay.
So I think there'll be a space where they'll take a debt, or they'll face a pressure on having that kind of cash flows to be managed.
Okay, Vinit, what do you make of PI Industries?
It's been a good company, good performance run, but I think it's little valued right now. I'd rather look at other players like Rallies, or maybe even I'd go with Rallies. I think it's a much cheaper stock. The entire pack is going to do well. So my play would be Rallies in place of this stock.
Okay, so the last stock that we'll talk about right now is Hyderabad Industries, or HIL. The counter has been on a tear. It's trading at a fresh lifetime high. Vinit, you all have a very bullish recommendation. I saw your report. The target price is 1700. What makes you bullish on HIL?
So we are seeing earnings growth double from here. So we'll see a EPS of 133 rupees.
Okay.
So the stock is available sub 10.
Okay.
And building products is a high growth industry. So I think the stock will get re-rated, very simply put. They're in all the spaces. They're into pipes and fittings, they're into asbestos, AC roofings, steel roofings. They're into solutions for boards and wall panels and all that. So they got a very rounded portfolio, the market leader. And this entire industry will do well given the shortage of sand, and two is faster turnaround time and growing acceptance, because all the players are doing market development. So the growth will be fast, and I see long-term growth which will be high digit growth.
Okay. Sangeet, you seem to be also bullish on HIL. What's the reason for that?
So yes, I am very positive on this stock. So if you drill down HIL, it's one of the oldest companies of India. It's about 70 years old. It's from the CK Birla family stable. So they primarily have two businesses. One is under the brand name Charminar, which is the asbestos manufacturing sheet, and the other is the Aerocon brand, wherein they have the green solutions. Now, historically, the asbestos sheet formed about 90% of the revenue. And that's why the market did not give it value, because it was always perceived to be an asbestos sheet manufacturing. However, if you see over the years, now the proportion of asbestos to non-asbestos business is about 60 to 40, which management has indicated they'll like to bring it down to 50s to 50. So asbestos, yes, it's a declining business. They have competition from the steel sheets. So that's asbestos. Obviously, it's not valuable in any case. But Aerocon is the business to watch out for. Under the Aerocon brand, they have the green solutions. They have also market leaders in AAC blocks, which is a substitute for red clay, red bricks. As Vinit pointed out, the sand availability is going to be a challenge. So AAC blocks is the future to watch out for.
Okay.
Healthy dividend yields about 1.5%. The new MD has taken over the helm at the helm from current year. And the next leg of growth, it seems, is coming from the CPVC pipes. So right now it comprises only 40 crores of top line, but the management has indicated they want to grow it 10 times over the next couple of years. An important development also has taken place is they have changed their brand from Aerocon to Birla Aerocon. So just by adding the name Birla, they'll get that extra leverage on the brand play, and that it isn't by paying any royalty as such.
Is there a potential target that you see, let's say, over the next few years? Do you see this as like a compounding story, or you see this as a multi-bagger?
No, so we recommended at around 800. And
it's only doubled from almost.
Yeah, it's almost doubled from here. Our near-term price targets would be about 2,000 or so.
Okay, what do you make of it, Samir? Two extremely bullish views coming in.
So I don't track it so detailed, but whatever I could see, they're doing a business which is again 60, as he said, 60% of their cash flow, I'd say, right? So they are investing in the consumer brands, more of the diversifying from the rooftops. So if you see the numbers, June quarter itself gives them the 80 or 85% of the profit. So that even if they take another 3 years, that won't go off because it's not gone off even when the other revenue is 30%. So that seasonality of just being a June quarter company, I have to hold it on to at least 3-4 years for me to have those 3-4 good quarters to give me that compounding of that stock or the company or the profits. Now the only point is if they use that cash flow to diversify into those populated segments, like pipes and fittings are very populated. They're into that soda ash, which is giving them a very good growth, around 50% of the growth, and it's 15% of the revenue. On the numbers wise, working capital wise, they're good. But as you diversify again, the working capital book always takes a hit. Because it takes, because whenever you try to push these kind of products through distributors want more payment days rather than anything else.
Okay. Sorry, I'll have to cut you because we're running out of time. Before we wrap up on the show, here's a quick recap of the guest views on the stocks that we've covered. Okay, Vinit, Sangeet and Samir, thank you so much for joining me on the show. With that, it's a wrap on today's Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg Quint.